Hi everyone, this is 2026 Mentorship Program Lecture 31. So in yesterday's lecture, which was the 30th lecture of the 2026 Mentorship Program, we discussed about price current data. I was trying to show you guys what I'm anticipating in price. I discussed about the probability of price trading to a draw on liquidity, which I used the 1 minute. Now I did experience a little technical issue around the replay, but I think you can get most of it off the replay that you can find on the YouTube channel. You can get most of the content on the YouTube channel. And make sure you go through that lecture. I talked a lot about price data, how to have that higher time frame bias, when to be patient, and to have a clear perspective to what you're actually looking for. And I gave you guys my perspective, and we'll do a little review on it. We'll talk about where price is currently at. And as always, we're going to go high, up to the higher time frame, down to the lower time frame to discuss the key areas that I'm still interested in. So I'm currently on the 5 minutes on the dollar index. Let me get some things off my plate first. So first, let's go to the weekly time frame. So there's a lot of ammunition in the weekly time frame. Let's do like this. Let's leave this. Okay. And let's make it back to the full screen. So on the weekly time frame, you guys know about what I'm actually anticipating from the weekly time frame. If you have been going through the lecture, you know that I've talked about my draw on liquidity, that I'm looking at price we're expecting the weekly order block to trade higher, that I'm anticipating higher prices, and my draw on liquidity is around on the buy side liquidity. And that have been my overall perspective in price. But at the same time, I explain about daily bias, how I do determine my daily bias, what I look for in price, what are the key principles I look when anticipating a daily bias. Now, regardless of what is the weekly perspective, when it comes to daily bias, you're looking at what is the most likelihood of price trading higher or trading lower on a daily basis. But when you are trading a weekly expansion, those are the times you take account of the weekly time frame. So let's go down to the daily time frame. On the daily time frame, yesterday I talked about price trading lower to run the sell side liquidity. I told you guys that if there's going to be lower prices in price, my drawn liquidity is the sell side liquidity. And if price is going to be trading lower, I will be looking at price trading lower. That was my daily bias on Wednesday. On the 4 hour, during the New York section, I pointed out the 4 hour fair value gap. I pointed out the 4 hour fair value gap. So if you look at the 4 hour candlestick, you can see here's the 7 a.m. candle, here the 7 a.m. candle, and the 7 a.m. candle is right at the 4 hour fair value gap. Now, the reason we're waiting for price to trade lower, the reason we're anticipating low prices running the sell side liquidity. That was the idea. That it is going to be lower prices in price. We want to see the 1 hour aligned with the idea in price trading lower. So first we waited for the 7 a.m. candle to close. After the 7 a.m. candle closed, I explained to you guys that now there's a swing high in price. You're just looking to get involved in the trade, and our draw on liquidity is price running out the sell side liquidity. Which I took a trade on Hero USD, took a sell. Sorry, I took a buy on Euro USD in price trading higher. Why on the dollar index is actually a sell, but I don't trade the dollar index directly. But on the dollar index, from the 15 minutes, I told you guys the idea of the 15 minutes. I say as soon as there's a 15-minute shift taking out the swing low, as long as there's a 15-minute shift, a retracement back to a point of interest, which you can see there's a 15-minute breakers block. That should be your entry in anticipating lower prices. And your drawn liquidity is the sell side liquidity. Now, price didn't trade to my target completely on Wednesday. It was from the opening price on Thursday, which is today, that led to the expansion that took out the sell side liquidity. So if I were to look at it based off a daily trade plan, I didn't held the trade till on Thursday. I closed my trade on Wednesday, but it was after the opening of the Thursday candle. So after the opening of the Thursday candle, once the odd was in my favor when it comes to spread, after the spread went down on my brokerage account, that was when I actually took profits. And it was a buy on Euro USD. So you can see I still have the setup to the buy side liquidity. And if I were to draw the trade out, here is the trade. Took a buy, stop it at the swing low. So the buy was directly from the 8 a.m. candle, and my target was the buy side liquidity. Now, before price actually traded to the buy side liquidity, for those that have gone through the lecture, notice that I talked about an aggressive entry. That was the first entry I was talking about. There was an aggressive entry below, I think it was below here, and the stop was at the swing low. I told you guys that I'm anticipating higher prices, but I'm not saying what I'm actually looking for on the dollar index. But on Euro USD, the 1 hour trend is already anticipating a continuation in running the buy side liquidity. But on the dollar index, I'm still waiting for the 7 a.m. candle to close. Then I can take advantage of the setup during 8 a.m. So during 8 a.m. led to the expansion in price, trading higher to get the buy side liquidity. This is not one of the friendly price action I can say. I can look at it as a kind of a low resistance liquidity run. It's one of a rarest high resistance liquidity run because you can see there's a lot of consolidation back and forth before actually running out the buy side liquidity. And it's a 2.8 hour trade, which traded to the draw on liquidity. So the setup was pretty in the right direction to what we're actually anticipating. For those that have did your back test on what I explained from just this live section, you can leave a little comment on how you took advantage of the trade. Now, this is based off the Telegram group. I want you guys to be more active, let's say a little bit proactive to what I'm actually doing. Know the drawn liquidity because I normally spend around an hour plus explaining to you guys what is my perspective in price, what I'm looking at price doing. And if I have an advantage of taking advantage of the trade during the live section, I do take advantage of the trade. But the live section is mostly about explaining every individual daily bias, what I'm anticipating, what price actually did. The same goes to today's price action. So far, I have been anticipating higher prices. Now, these are the high probability setup. Now, I will explain. First, after price respected the weekly fair value gap. Now, let's follow some of the animation back to the charts. Okay, let's go. I think this is enough for now. So after price respected the daily fair value gap, traded lower, Tuesday traded lower, Wednesday, price formed a swing low. After the closing price on Wednesday, price formed a swing low and there's a daily fair value gap above Wednesday's high. So the idea was that if there's going to be a counter trend in price, you might see a retracement in price running the daily fair value gap. Now, there are two scenarios to this price action. First is directly from the daily time frame. Directly from the daily time frame, if price were to respect the swing low, trading directly higher to the daily fair value gap, it makes it a high probability setup because price align with the idea in trading higher. Now, in a sense of aligning with my trade plan, and that doesn't mean it's an overall high probability setup. It's based off my own personal trade plan. When the low is kept intact, when price is not trading below the low, it makes it a high probability. But first, from the opening price, price took out the sell side liquidity. That got to the second scenario of my daily bias. Now, I wouldn't recommend it as a high probability setup. After a run on the sell side liquidity, if we were to look at the idea, first we need to play both sides. We need to look at both sides. What's the best scenario from both sides? That is one of the best ways to determine your bias. First, if there's going to be a continuation in this trend, trading lower, the key idea is that we should see a 4 hour trend dedicating to the idea in price trading lower, which we should see that there's a point of interest on the daily time, sorry, on the 4 hour time frame that can lead to a resistance in price trading lower, which clearly from the swing high to the swing low, there isn't any point of interest like a fair value gap on auto block to look as a resistance area. Because when I'm looking at a 4 hour candle on Hero USD, I wait for the 3 a.m. candle. Those are the times where I'm not starting my London section from the 2 a.m. I like to wait for that 4 hour candle to close. Now, the 4 hour candle took out a sell side liquidity. We know that there's no point of interest in price to use as a support, which most likely there will be a counter trend that might lead to a retracement to the daily fair value gap. And based off a power of three, from the opening price, price took out a sell side liquidity, traded above the opening price, which was around the closing price of the 4 hour candle, which was around 2 a.m. If I were to be anticipating higher prices, I need to see a 1 hour trend aligning itself with this idea before actually taking a setup. So moving to the 1 hour time frame. After the run on the sell side liquidity, shift in structure. Now this is the closing price of the 2 a.m. candle. There is a shift in structure in price, taking out this high. And looking at this candle, clearly you can fully identify this candle as an order block. Now there's a full confirmation in price that the 1 hour time frame is aligned with our trade idea, which is one of the key reasons you need to use the 1 hour. It gives you the timing to where and what you should be doing. Now, price respected the order block, aligned with the order block. If price were to support the order block from the 4 a.m. opening candle, we should be anticipating higher prices. And there's a 1 hour fair value gap before the inversion fair value gap, but just mark out the 1 hour fair value gap. The point is that you need to take note of all points of interest before actually looking for your buys. Now, the drawn liquidity on price is to run the high, the 4 hour swing high, which is aligned with the daily fair value gap. And the power of three is in our favor because from the opening price, took out the sell side liquidity, did a shift in structure before the 3 a.m. So there's a silver bullet setup called the 3 a.m. to the 4 a.m. setup, which, if you understand price action, is easy to take advantage of those trade setups. Now you know the price is supported from a 1 hour order block. Your first drawn liquidity should be the swing high because this is the closest swing high to current price action. And your overall target should be the daily fair value gap. So knowing that you have this perspective in price, knowing that you already have the technical in place and everything is aligned, these are the times for you to take advantage of the setup. And you can either use the 15 minutes, which you find the entry at the 15 minutes, you can see the retracement entry at the fair value gap or the other block. Stop loss should be below the 1 hour fair value gap, or you just use the 5 minutes, which I would advise to look at both time frame. Look at the time frame that gives you a more clearer and broader perspective in price. And your first setup should be this from the swing low, stop loss at the swing low. First target is the buy side liquidity, and your overall target is a run on the swing high. Now, I've been talking about the London section. I just wanted to tell you guys and to show you guys how I do look at price from the London section to the New York section because you're on the right trade both sections. I look for my setup within both sections. So for the continuation, the reason I marked out the buy side liquidity, when you look at the 1 hour, there's a short-term retracement to a 1 hour fair value gap. So I was looking at this as a re-entry to add up more position because I already took out most of the trades in taking partial because price really came close to the take profit. So I took a lot of position out. I'm already in profits and at the same time I'm holding a 0.25 risks involved, which is I've taken 75% out of the trade. I'm only holding 25% of the position. So on the 5 minutes, so here is the opening price of the New York section, retracement to the 1 hour fair value gap, and price have been respecting it, trading higher. Now the reason I didn't start the live section a little bit early was because there was always some technical issues with my OBS. Now this wasn't the fault of the OBS, it was actually my fault. I think my streaming key wasn't linked to the OBS because I reinstalled the app from yesterday's live section. After yesterday's live section, I had to restore the app because it wasn't a network issue that had the stream cut off at half of its streaming. I was cut off from the streaming at halfway of it before I later went back to reconnect. So I thought of restarting it maybe to fix the issue, which it didn't fix the issue, which I'm testing it now to see if it's fixed. It have fixed the issues. So I was trying to get everything in place during the 7 a.m. because I didn't check it if it was still connected. So that was the reason I didn't start the stream at 7 a.m. So now I wanted to talk about something. Now that I've explained everything about today's point of interest, the daily bias, and all that. Now let's talk about, was it worth the idea of actually taking a risk in this setup? Because I can tell you that I know a lot about price to take advantage of price every single trading day. I've studied a lot of price action. I know a lot of way to develop an idea or a perspective in price to look for a setup, which I will well assure you guys that when you spend more time on a chart, you get to the point where you always have a good explanation to what price is actually doing that might lead to a trade setup. You have a good explanation to what price is actually doing that might lead to a trade setup. That is one of the benefits of, I can say it comes both ways. It comes as a benefit at the same time it comes as a distraction or as a cost to knowing too much on every given day. Now, is it worth it to take advantage of setup without you sticking to your trade plan? Or we can look at it in this way that based off your trade plan, you shouldn't be taking trades on days like this, which I can tell you, based off my own personal trade plan, I don't have this trade set up on my trade plan. I know about it. I've traded it a while back. I traded a lot. I think around 2024. I tried to trade every day, so I was looking at every trade idea that can give me a clear perspective to what price will be doing. I was weighing down the probability of price trading higher, probability of price trading lower. It was stressful, and I did learn a lot doing it. But around that time, I was doing all this. I was doing everything possible to get involved in trades. Now, the reason is that, is it worth it to go through those drama, or I wouldn't call it drama, to risk your money on something that you don't have enough data or is not actually your trade plan? Personally, I would say that it doesn't worth it because when it comes to trading, the only advantage and the only thing you have in control is your capital, how you manage your capital. When it comes to every individual setup, you have zero control over the setup rather than how you manage the trade, which is still protecting your capital. If you're moving your stop to break even, you're protecting your capital. If you are taking partials, you are protecting your capital. Whatever way you are trying to spin it around, the only control you have is your capital. And I would tell you from an experience based that it will be wise enough for you to invest your capital at the right time. Do not invest your capital on every trade idea. Invest your capital on a proven rating plan that if you were to take losses on that trade, you know that you stick to your plan. You wouldn't think much about the trade setup because you know you followed your plan. It wasn't something you just looked upon and tried to take advantage of it. It was something that was proven, data proven. You have back tested it. You have trades and trades, past trades of you using that exact trade plan to take advantage of the setup. Those are the kind of setup that you should be investing your capital in. So, from a perspective trade mindset, for having that prospective traders mindset, invest your capital in a proven trade idea. And don't try to trade every day. Try to give yourself some break to study price. Have a free day that you have a free roll in price that you're just looking to see what price would do and to see how price will align with the trade setup. Those are the key areas you should focus on. Only invest your money on a proven plan that you have back tested and you have data proven plan to prove that it's actually profitable trading this way. Don't just go into the price action and look at what price is doing and try to react to what price is doing. Have a proven plan that's okay. The daily is on this level, the 4 hour is on this level, the 1 hour is on this level. And if everything were to come in place, I will be taking a trade setup because on my trade plan, whenever the daily is like this, the 4 hour is like this, the 1 hour is like this, the 15 minutes is like this, and the 5 minutes like this, then those are trades that I should invest my money in. Because on a daily perspective, I don't have a daily bias from a daily time frame. I don't have a daily bias. The idea was that price shouldn't go below the swing low. But the fact the price traded below the swing low, I don't have a daily bias. The bias I'm actually using is that I'm trying to see if price will be trading lower or will be trading higher, which you can tell from a lower time frame if you know how to align a time frame correctly and understand time, understand power of three. You can easily identify scenarios where price will be trading on a counter bias, trading against the Asian section trend, rolling out Asian section high, trading to previous day high after taking out previous day low. But first, I will tell you guys that invest the most part of your capital into a written, proven plan. Now, let me explain how I do take advantage of this. Now, on a setup like this, I use it to get involved in trades just to give myself something to be worried about or something to put my attention in the charts to give me that sense of purpose in looking at the chart on every day-to-day basis. Trust me, you will need something like this on every day-to-day basis. Now, the idea is that are you taking advantage of those setup on a day-to-day basis, which is very important for you to understand if you will be taking advantage of that setup or using it for practice. So I got to the idea is that my idea to how I do trade things like this is that I will look at price, look at the best scenario in price, trading higher or trading lower. Then I stick to whatever ideology I stick to or whatever theory I have in price or perspective to where price should trade to. Then in most cases, I use a prop account, not a funded account. I just use a prop account because I know that I can purchase another prop account and I'm still sticking to a risk factor and it's a separate account from my main account. But with traders that are starting, times like this, you use a demo account for practice. Or if you were to take advantage so that you can have more attention to the charts, you can just risk a very bare minimum to what you actually risk on a real setup. So let's say on a normal trade, you do risk to 1%. Trades like this, you risk a 0.25%. Not because you're leaving profits on the table. No, it's because you don't want to regret the trade trading against your plan, affecting your probability factor that is aligned with your trade plan. Maybe on your trade plan, you have a 30% win rate that in every 10 trade, and I'm just giving you a very low probability trade plan. You have a high R trade and you have a 30% win rate. In that 30% win rate, in every 10 trade, you're looking to win three and lose seven. Sorry, instead of L, and lose seven. But because you went in with a full position, took a 1% trade, which means you're adding the probability of this specific trade plan to your overall performance. So if the trade were to be a loss, this would increase your losses to 8 losses. 8 losses to 3 win. You know that you don't have a 30% win rate anymore. You're really trading below a 30% win rate. So for those that don't understand, you know what I'm actually talking about. If you were to take a loss on this trade setup, so let's say you took 3 win, that should be a 27% win rate. So it will affect your trading result, and you don't want that to affect your trading probability unless you can backtest it, generalize it to see if you can add it to your trade plan, which you need proven data to add it. You have more history on it, the more you study on it and understand it more better. Remember, you need a baseline trade. You need a trading plan that is the baseline of your trading journey, which I've explained mine. I've talked about mine before adding up other trade plans to it. I started from a weekly expansion because at that time I was more focused in taking weekly trades, looking for swing trades because I wasn't having enough time to look at the charts. So I focused taking advantage of the weekly expansion trades. During that time, I wasn't calling it a weekly expansion, but I was looking at the 1 hour as my entry time frame. I spent a lot of time learning how to trade on that time frame before even coming lower to a 5 minute time frame. That was when I was having more free time that I started going lower, moving to the 15 minute and the 5 minutes. But when you talk about profitability over a large scale of months, let's say 3 months plus in being in profit, making a bare minimum of 4% or higher, which around that 3 months I made 11% a month. But during those process that I knew that I can work on this, if I spend more time on this, work on this perfectly, what I did on a 3 month basis, it was with an expansion trade, a weekly expansion trade. That was where I actually started from in seeing profitability. So when I started seeing profitability from that time frame, I made it my base. Any other trade plan I have is built upon that idea. Is built upon that idea. So the base trade plan is your first trade plan that you are going to be looking at the probability. Those are the trade you're actually going to be risking your money or getting involved on a high risk trade, or you call it a high probability setup, whatever. But just know that it should be your base plan. Then, then depending on your time, you can add up more trade plan to it. And those are the times that you set a specific risks to the trade plan. Now, let me explain it from a prop firm perspective. When I'm trading a weekly expansion, I normally take trades with around 1.5% to 2% with a prop account. But let's talk about it from a funded account perspective. From a funded account, when I'm taking a trade on every individual currency, if I'm already on a trade from a weekly expansion perspective, and at the same time I'm looking to take advantage from a daily perspective to lead to a continuation in that overall trend. My maximum position that I have in rigs on every given moment shouldn't be above 2%. So it gives me a room, mostly when I've taken partials or thrown my stop to break even, I still have more rigs, more free rigs to take advantage of. So those are the times where I'm taking advantage of lower time frame trades. So I take advantage of lower time frame trades, but my overall risks should not exceed 2%. So recently that I put my whole focus into Euro USD and the dollar index, whenever I'm taking trades on Euro USD, my overall risk is never above 2%. It's never above 2%. So you can understand that I do have a base and I know how to manage my capital, which I've told you guys that that is the only part in trading that you have control of. What I'm actually risking on every individual trade, how I'm managing my trades is your capital. So learn how to control your capital is one of the major parts in becoming a profitable trader. In becoming a profitable trader. So we are at 8:50. Currently, we don't have any high impact news this week. I think it's just looking at price, not expecting any impulsive trend. So we are at 7:51 New York Eastern Standard Time, and price is currently at this price range. Let's see what price is actually doing. Now, based off the 15-minute and the 1 minute entry, it should be what is price doing on a 15-minute basis. So on the 15 minutes, price took out the swing low before trading into the 1 hour fair value gap. Now, if there's going to be higher prices on the 15 minutes, it should be based on the idea on how price is reacting to the 15 minutes order block. So on the 1 minute perspective, in looking for your 1 minute entry, depending on how price is reacting to the order block. Once price trades above the mid range, then you can anticipate a continuation to run the buy side liquidity. But on the 5 minutes, if there's a fair value gap in an expansion in price trading higher, you can take advantage of the setup. But I don't think I'll be staying long in this section in this live lessons today. I think I've already covered up one of the major parts. So what I'm actually trying to explain is just for you to take account of what I talked about and learn how to take advantage of it. So I think that's going to be all on today's live section. I think that's going to be all. I already covered up the major parts to what I was actually trying to explain. So that's it for this lecture.